It's Friday, January 7th, 2022. A lot to talk about, ladies and gentlemen, and I wish I had good news, but I've got to tell you, there's nothing to laugh about here. There's nothing to smile about. Things are really getting out of control. This economy, these markets are getting very, very scary. Most of you have already heard the news. The U.S. economy added only 199,000 jobs in December. They were expecting to add well over 400,000 jobs. And we were informed today that unemployment went from 4.2% down to 3.9%. Now, if you believe that, you probably believe in the tooth fairy. When I look at these numbers in December, and we'll go over this a little bit more specifically, but before I do, think about December. It's the holidays, Christmas, UPS, FedEx, your major retail chains are all adding extra workers on, right? So December should be a really, really good month for adding jobs. And it was absolutely horrendous. This is a huge red flag, ladies and gentlemen. This is a canary in the coal mine right now. 199,000 jobs added to this economy in December during this so-called recovery, during this booming economy. And this is the best we're going to see. This, ladies and gentlemen, this should really, really concern you. And of course, most of these jobs were in leisure and hospitality, as they usually are. So just to go over some of the numbers, in December, in leisure and hospitality, which topped the charts at 53,000. So think about that. More than 25% of the jobs added were in leisure and hospitality, people working at restaurants and bars. Second, professional and business services added 43,000. Manufacturing added only 26,000 jobs. Construction added only 22,000. Transport and warehousing, only 18.7 thousand, with 100 plus ships sitting out in Long Beach. That number should be much, much higher. Wholesale trade, 13.7 thousand. Financial activities, 8,000. Those are jobs where people are going to be working for banks and credit card companies, calling you, wondering where the check is, hounding you because you missed a credit card payment or an auto payment or a house payment. Healthcare added only 6,100 jobs. This doesn't even make sense anymore, does it? With everything happening with the health crisis, you would think that the amount of jobs added in healthcare would be mind-blowing, but they're not. So this is no doubt concerning. We're being told daily that the economy is strong, that the outlook for 2022 is going to be incredible. We're going back to normal. We're doing anything but getting back to any sort of normal. This economy, ladies and gentlemen, is in humongous trouble. It is dying. It is decaying. It is on life support. In fact, this economy, in my opinion, has already collapsed. People are talking about, when's it going to collapse? It's already collapsed, ladies and gentlemen. Take a look at what's going on. And these job numbers just reinforce everything you've been saying, everything I've been saying. This is really, really concerning. I want to share just a quick story with you today. I had to take care of some very minor banking business. And one of the large banks out here, one of the large chains in my area has been closed for multiple days, and they're blaming it on technical issues. They cannot even open the bank, ladies and gentlemen. Their ATMs are down. You can't walk in and get money out of it. You can't walk in, period. The doors are locked. You can't even get in. It's been like this for a few days. And we talk so much about not leaving all your money or all your assets in a safety deposit box in a bank. This is another reminder, and I just wanted to report this to you today. A very large bank in my area has been shut down for a few days because of technical issues. Other banks have shut down in my area because of staffing issues. One day you're going to go to the bank and it's just going to be closed for good. And this is, if you have a lot of money or you have a lot of gold or diamonds, jewelry, or cash in a safety deposit box, you better be very, very cautious. I would not be leaving too much in a bank right now. Article today on CNBC. Apology notes, store closures and reduced hours. Here's how retailers are handling it. I called a restaurant up on Friday night for takeout. They closed at 7 p.m. on a Friday night. I couldn't even get takeout. And this is more and more common, at least in my area. Restaurants closing at 7, 8. If a restaurant is open till 9 o'clock out here, that's out of the ordinary. Most restaurants now closing around 8, maybe 9 o'clock, and that's it. But on a Friday night, I've never heard of a restaurant closing at 7, 8, or 9 o'clock on a Friday night. This is just, it's incredible what we are watching take place. And what does this do to the bottom line of restaurants? If they're, like most of these restaurants back in the day would be open at least minimal till 10 o'clock, 12 o'clock, 1 a.m., and now they're closing at 7 or 8, maybe 9 o'clock, and they're opening later, closing earlier. How in the world are restaurants going to hang in there in 2022? Banks, how are they going to hang in there? They're not even open. They're just closed. This is incredible. The Hedge today, shocking consumer credit numbers. U.S. credit card debt soars most on record. Another canary in the coal mine. This also extremely concerning. And I want to go over these shocking numbers. When we look at student loans and car loans, in November, consumer debt exploded by $40 billion. That's double the expected $20 billion print, more than double the $16 billion October number and the highest on record. 20 billion of this is a majority of student loans and car loans. Now, the real stunner is revolving credit card debt, ladies and gentlemen, which more than tripled in November, soaring to $19.8 billion. And that's from $6.6 billion in October. This is the highest in history. And let's clarify a little bit what's going on. People's savings, especially the middle class households, may have spent all of their stimulus money at this point. And most of that savings, by the way, came from stimmies to begin with. So the stimmies allowed people to put some money in the savings that they didn't even have. And a lot of these are people in the middle class because they didn't have any savings before the stimmies. So things just didn't start collapsing a year or two ago. This has been going on for years, ladies and gentlemen. But these numbers clearly demonstrate that any savings that the U.S. middle class households may have had were courtesy of stimulus checks, and they're now gone. So how and where does the spending come from? What is going to keep this economy propped up? It certainly won't be from people's savings. They don't have any savings left. Ladies and gentlemen, I hope and I pray that you've been preparing, because this 2022, as expected, has started out absolutely bananas. We got big trouble. Dow Jones up, 4 points today. It should have been down 4,000. With these kind of job numbers, 4.5 million people quitting their jobs in November. 207,000 people filing first-time jobless claims last week. Got those numbers yesterday. The Dow Jones should have been down 4,000 points today. But again, it is so manipulated. So what was the good news that kept these markets propped up today and not absolutely collapsing? What was the news that kept it all going? We have a major health crisis going on, 4.5 million people quitting their jobs in November, people now reliant on credit cards, 199,000 jobs added to the economy in December when it should have been well beyond 400,000, probably well beyond 500,000 because it's December. We should have had extra holiday jobs. Here's another one. With more than 500,000 Americans unhoused, the U.S. is still struggling to solve the homeless crisis. This is on CNBC today. If the consumer is so strong, why is the consumer so dependent on credit cards? Why does the consumer have so much debt? And why are we seeing this homeless crisis continue to run out of control here in America, the so-called wealthiest nation? Yes, the biggest debtor nation also in the entire world. We've got serious trouble. Over 500,000 Americans were unhoused in 2020, according to this article. I think the number is much, much higher than that. And of course, if you're living in your car or dilapidated RV or van, you're considered housed. How many people are now just surviving living in their cars? And pretty soon, if you live in a cardboard box, you won't be considered unhoused. You won't be considered homeless because you have a cardboard box. So that'll be next. I mean, these numbers are so manipulated. Everything is so fake. And another article today that I found really fascinating, I want to share this with you. It comes from wolfstreet.com. It's titled New Vehicle Sales in 2021 at 1978 level. It says 25 years of stagflation interrupted by plunges, but prices explode to what the F level. GM and Ford sport 6-year declines of 28% and 27% down. So GM is down 28%. And Ford down 27%. Toyota blows all away, but still down 7% from 2015. So we have a crisis in automobile production also in America, which is not helping the economy. So what in the world continues to prop up the stock market when vehicle sales are tumbling? Yes, they're charging more, but they're producing much less and they're selling much less. We're not adding jobs. We're adding more and more unemployment. And who believes this 3.9% unemployment number again? You got to be believing in Santa Claus if you believe that unemployment in America is 3.9%. More so, I can't believe that people don't see what's going on. I really, that's what I find really amazing is people still don't see what is happening. Bitcoin right now at 41,500. It's currently down $1,700 as I make this video. Gold was up around $8 today. Silver came back a little bit. So it was good to see the metals holding steady. 10-year Treasury bond yielding, I think about what, 1.766. So look, the cost to pay that interest on your credit card is going up. The cost to go buy a house, to get a mortgage is going to go up. The cost to finance a car going to go up. The cost for a payday loan going to go up. Cost for a personal loan going to go up. Everything is going to go up, and it's going to go up even more with a massive amount of inflation that is going to continue to rock and absolutely reckon this economy. So why the markets aren't collapsing? I'll tell you, when they do, ladies and gentlemen, and they're going to, this thing is going to be so out of control. People right now are done. Millions of people are broke. They're done. They have absolutely no savings. They're not paying on their houses, their condos, apartments, their cars. And, you know, at least if your debt's paid off and you got a few bucks put away, you can adjust a bit. You still got a lifeline. You can still breathe a little bit and you can make some changes. But when you're broke and when you're loaded with debt and these debt collectors are calling you and your credit cards are tapped out, you can't do nothing. At least if you got $20,000 stashed somewhere and your debts are paid off, you've got some breathing room. You've got some time to take a breath, sit back and readjust and reset. But if you're broke and you're loaded with debt, you're done. You're done. And I'm sorry to say that. I've been talking about this for years. And this thing has been inflating for years and years and years. And these people who believe that this couldn't happen, these people that just, say, I'm a broken record, I've been talking about this for 3 years. This thing should have busted loose years ago. But they have spent so much of your money, raised your taxes so high, allowed the Fed to come in and buy up the stock market, buy up all this debt and keep everything going. Keep this house of cards on top of quicksand going. But you're going to find out very, very soon the ramifications and the massive consequences that everybody's going to pay for allowing this Ponzi scheme to take place. I'm going to leave it there. I could rant, but again, as I close, this is very, very scary with what we're watching take place. They're going to lose control, ladies and gentlemen. These people who believe the Fed can save this, these people who believe that the Fed's going to pull a magic rabbit out of its hat, you're sadly mistaken. We're too far gone. Too far gone. We're going to feel real pain here. And many people, their standard of living is about to change, and not for the positive, not for the better. And people better get in a mindset right now, a survival mindset of how they're going to survive the greatest depression the world has ever seen. It's a beautiful day. It's tranquil, peaceful, quiet, 72 degrees. But let me tell you, I can see past the puffy white clouds. I can see over the rainbows, and I can see exactly what's coming, and so can you. And that's why you're preparing, and that's why you're going to continue to prepare, why I'm going to continue to prepare the best that we can. Preparing the best that you can, that's all you can do. A little is better than nothing, ladies and gentlemen. Having some items to barter, having a little bit of gold, a little bit of silver, a little bit of food is going to at least put some of the odds in your favor, give you a little bit of an advantage, give you a little bit of time. But doing nothing guarantees that you are going to be absolutely destroyed and wiped out. Stay safe out there, and God bless.